Hi friends, good morning. What is stock market and what are stocks? Why a country or a developed country or developing country, why it wants stock market and why companies requires to enter into the stock market and what are stocks actually? Why company has stocks? Why it was necessary a company should have stocks? Is it necessary or not? Let's discuss about it. Okay, what are stocks? First, yeah, in general scale, we are all heard about the companies like Tata Motors, Tata Steel, or Reliance Industries, or any other stocks. You generally heard it. What are those? Why companies came into the stock market? Why generally it can't survive without entering into the stock market? Why? Okay. On basic scale, we all have some idea why a company will enter into the stock market because to raise funds. Okay, why can't it take debt loans? Why only why it was required to come into the stock market? Why can't it take loans from the banks? Because there are various issues. Not every company. I mean, loans has or also loans will also have some limits. And coming to the stock market is not only to raise funds, for also its business purpose. Business purpose a company to gain its reputation and brand image. Yeah, various things will also involve indirectly when company enter into the stock market. It creates where the stock market where a company will create its brand image like Zomato. There are a lot more things we will discuss in Zomato. Why? I mean, what is the share price exactly? And just we'll see Zomato share price now. Maybe it's around 300 as of now. Okay, why? What is it generally? Zomato share price was 300. Current market price was 300. What is it? What is 300? How many shares are there for Zomato? Maybe I don't want to get into the numbers exactly. Maybe lakh or 2 lakhs. What is the number? Why it was only 300? In depth we will discuss later, but on a broad scale I will tell why a company come into the stock market because to raise funds. If you raise funds to the stock market, they no need to pay the interest for that. And profit or loss, the shareholders must take it. If you get profits, they on percentage basis, every shareholder get the profit on percentage basis. If you get loss also, they have to bear it. Anything the shareholder has to bear it. Company is not responsible for that. And to reduce the risk, a company will come into the stock market. Generally, a company will entering into the stock market through the process called or known as a IPO, initial public offering. It is also known as a primary market. Okay, we will discuss one by one what is primary market. In simple words, I can tell primary market is the market where the investor, any investors, there are types of investors, any investor will directly buy the stocks from the company. The process called as a IPO, but the market is known as a primary market. Okay, the shareholder, I mean, the investor will directly buy the shares from the company. There is the involvement of a broker. Here, the broker means any app like Grow, Zero, the Upstocks, Angel One. These are all known as a brokers. Okay, they will involve, but the funds will directly go to the company's account only. If you apply any IPO, we will discuss about each details about IPO later. But when we apply IPO, the funds we applied will directly go to the specific company's bank account, not involved any broker, any government or anything. I recently applied some IPOs like War Energies and recently I applied a lot of IPOs, but I got one to allotment also. The funds will directly went into the company's bank account, official bank account. I also get the message like your funds like 15,000 is credited, debited from this account and credited to the specific company's bank account. I got it. Okay, our money is directly went into the companies. I mean, which company is coming into the the company which is came into the stock market. Okay, now got it. That is called an IPO and primary market. That market is known as a primary market. The real market which we daily see is known as a secondary market. We call it as a secondary market where the every individual or any institutional players or buys shares and trade shares. Trading means buying and selling is known as a trading. Okay, every retail individual investors or non-institutional investors or qualified institutional buyer. These are all the types of investors who buys shares from another buyer, another seller. Sorry, someone sells the share, someone buys the share. Where it happens, the place is known as a demat account. That is the secondary market. Primary market also, primary market is there in primary market. Primary market is also in demat account only, but it's not any separate page or separate thing. The IPO processes is all known as a primary market. That's it. And that's it. Secondary market means the remaining all things, F&O, equities, debts, bonds. These are all known as a secondary market, where we don't know who is buying our share, and whenever we buy a share, who is selling, we don't know. But all will run in background. That is known as a secondary market, buying and selling things. If you buy any stock, that is in secondary market. Okay. Okay, we will discuss everything in detail. What is NSE and BSE? NSE is a national stock exchange, and BSE is a Bombay stock exchange. Okay, these are all exchanges. What are exchanges means? The place where the shares will execute. Someone buys and someone sells. The place where the process, the all things, lot of background things are there. Every investor will have some ID, trading account, demat account. This process, the all calculations will done in NSE. That is an exchange where the it is a mediator for buying and selling the shares. Okay, equities. What is equity? Equity is known as a general. We call it as a shares. I mean, in stock market, they are not only shares. Equity is known as a shares, generally company shares. Other than that, there are also debts, bonds, other things also. Equity means a particular company shares is known as equity or equities. Equity market. General buying shares is known as equity. Dividend. Dividend is nothing but a company will pay the shareholders the profit which the company gained. For every one shareholder, they give some money like 20 rupees, 30 rupees directly to the shareholders. Some companies will give, some companies will not give. They will directly add to the shares and something happens. Some companies like TCS, Infosys will give directly profits to the shareholders, because sometimes the company don't require money. Then it's companies matter, giving dividend or not, it's companies wishes. Broker. Next, broker means the mediator between the in secondary market or primary market. The mediator between the investor and exchanges is known as a broker. Broker means grow, zero the upstarts, angel one, fires. There are a lot of apps. These are all apps, or these are all applications. They are known as a brokers, which will take some percentage of commission from trading the shares and IPO, anything. They will take some percentage on every trade. It was very less, maybe 0.005 or maybe 20 rupees per delivery share. Or there is some things, some percentage basis they have. On a large scale, it was very less only. Okay, those are brokers. Okay, trading. Okay, it is a big man. I mean, trading. It has a lot of things to discuss about trading. We'll discuss it later. IPO, I already talked about it. Mutual funds. Okay, what are mutual funds? It's an important thing in a stock market. Mutual funds. Generally, there are two things generally in a stock market on a broad scale. One are stocks, one are mutual funds. What are those two things? Mutual funds is also known as a stocks. The funds is known. I mean, generally, mutual funds means we sometimes some beginners or some the persons or the investors who are not well known about the company financials or financial knowledge. The investors who don't have financial knowledge will invest through the mutual funds. The mutual fund has some manager who will like 30 to 40 years experience, who is well known in financials of any company. He will take care of that funds and he will invest into the any stocks. He will invest on his knowledge. We are giving directly our money to that fund manager. He will invest, and whatever the returns he get on that investment, he will give to us by taking some commission, 0. Something, some percentage. If we get a 30% profit in a year, he will take 1 to 2%, and the remaining 28% he will give to us. That is known as in broader scale. That is known as mutual funds. There are a lot of mutual funds like Nippon India, Tata, HDFC. There are a lot of mutual funds. The main goal of the mutual fund is they will invest our money instead of us, and whatever the profits we will get, they will take commission. We will get whatever the profits to us. Mutual funds are very less risky comparing to directly investing into the stocks, because they are well-known experts. They are in industry in 30 to 40 years. They are well-known about they'll it's their work to monitor they will well known about the financial, what is the company's ratios and what is the debts, what is the profits getting. They will always research about that, because then they will always research about companies. That's why they well known about that. Whenever the company is going to downfall, they will take that funds and they will invest in another fund. Yeah, it's the best option any beginners to enter into the stock market. Not beginner who don't want to research about the companies but want to invest and want to gain the profits. It's better to go through the mutual funds. Yeah, if someone is interested into gain knowledge and someone is interested to research about the company, they can directly invest in the stocks. It's their wishes. Okay, it's a big topic about mutual funds. The main aim is we are not investing. We are giving our money to some fund manager, some expert. They are investing. I mean, they will invest, and whatever the profits will gain on percentage basis, they will give to us. That is known as mutual funds. Okay.